Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for January 2025. We're back presenting this for you this year, a brand new year, on behalf of Ainslie Crypto. We have our panel back as usual. Joe, Isaac, welcome, gentlemen.
Welcome back. It's been a big year. Well, last year was a very, very big year last year. So this year is going to be even bigger. That's what I can say
Well,
today.
I don't think
It's
you're
been a
wrong,
big
Joe.
week. It's
Yeah,
been a
that's
big
right.
week.
I don't think you're wrong when you say it's been a big year. We're coming to the end of January, and it's been a big year already.
Yeah.
We're recording this on the day sort of after or in Australian time, the day of the Trump inauguration. There was so much happening already, so much to discuss. I mean, we seem to say this every month, but this was really one for the record books, I think, particularly what's happened in the last 48 hours or so. Lots to get into there with Bitcoin in particular. Let's park that for the time being because there's so much we can talk about in the Trump area in particular, and Trump coin and what we saw happen there, what we saw happen with Bitcoin. It all just happened really recently. It's all very fresh, so it's going to be a very exciting episode. We'll start off though following our normal format that we have been following, and Isaac just pointed out before, this is nearly a year that we've been doing these videos for. So you can go back and see we've been fairly consistent all the way through in approaching it this way in the markets. And I think we've actually been pretty spot on in our analysis by approaching it this way. So we'll continue doing what works for the time being. We'll do that big picture macro, dig into the Bitcoin market analysis, and then throw some technical analysis on top. Joe, the macroeconomic background has been quite challenging, I would say, over 2024. We're starting this new year in our minds that we're probably heading to the macro top, the cycle top, the global liquidity top, the things that we look at. We've used this indicator the whole way through to map that out. Are we still on track from what we were saying last year? Do you think this is still a 2025 story that we see these highs in place and then need to start considering getting out of Bitcoin position and start thinking about a bear market around the corner? What's your view starting off this year?
Yeah, all throughout last year we were quite bullish, as we made it quite clear in every video that we did last year. And we said that this year was probably going to be a challenging year where you effectively squeezing out the last bit of gains. We don't necessarily think that is today or in the next couple of months, but we are looking at, in terms of liquidity, the next big rise. We're sort of going to potentially have our finger on the trigger for looking for a sell signal, particularly for Bitcoin. The chart we've got up at the moment, it's still saying we're in an early cycle, and a lot of that's to do with, as we'll talk about as we go through this episode, a strong US dollar, which is slowing growth globally, which really, really does weigh down the other economies. So if you're looking at the US in a vacuum just as itself, they've sort of moved into a mid-cycle. But as I said, strong US dollar is really slowing everything down. And, once that US dollar comes off, that's when we're really going to see liquidity kick up.
And we've been discussing this internally. We would probably argue that we are absolutely mid-cycle, that we're further up, and the data lags a little bit. So as we see that January data come through, we're expecting to see that on the other side of that halfway 50 line and heading up and to the right to form that eventual top. You mentioned the US. If we look specifically at the US data, the growth, we haven't seen this. Often people focus on the manufacturing, but they need to remember it also. Services is a relevant part of this discussion, but services has ticked up. Manufacturing's heading in the right direction it's been trying to do it really most of last year, but everything seems to be in place now. Our forward-looking indicators take into account orders and inventory that's on hand are showing it's all looking pretty good. So growth-wise in the US, there's no recession in sight, as we could say right now, is there?
Absolutely not. Absolutely not. It's taken a while for this to start actually happening, but I think we're in the midst of it starting to really kick up now.
And the other side of that equation is the inflation story, which there's going to be continued concerns over whether inflation does pick up, which is really what's constrained a lot of that liquidity, because they haven't been prepared to, cut rates or really pump a lot of liquidity into the system while inflation is high. 3%, it's sitting there. We're not getting any real value from our leading indicator here because they're both saying the exact same thing, pretty much spot on, just under 3%. Is 3% acceptable potentially in 2025?
I think if it's not volatile, I think it's going to be acceptable. It's when you get those you get those kicks up in turn up in inflation that no one was expecting. So generally speaking, when you get the PPI and CPI data released, there's a pretty good expectation of what it's going to be. It's when it exceeds those expectations, and I would say anything much past 3.5 from here is probably not going to bode well for markets. We saw what are we now? At the start of the month, we saw inflation tick up a little bit, and we had that little bond market tantrum, I suppose you can call it. And then we had some some other data come out about a week ago, which sort of leveled it out a little bit more, and the market seemed to be happy with that. So 3% is fine if we sort of maintain that. It's just when things happen that weren't expected, that's when the market really doesn't like it.
And do you think, like, my view on this is that it's setting the framework for what ultimately will become a big problem later in the year, and that would line up very nicely with our expectation of a top later in the year, where the inflation really does start to pick up significantly, and they're out of tools to deal with it. So they have to go back into raising rates, and they have to go back into sucking liquidity out of the system, right when the system never got the full amount of liquidity it needed. Is that your sort of take on it as well for that, if you think potentially second half of the year story?
Yeah, and it makes sense with that ISM chart that we were showing before as well. If that's starting to turn up, like your goods and your service and your manufacturing starting to turn up, it means the economy is starting to warm up, and then it eventually is going to start gathering speed, and it's going to get to the point where inflation it is inflationary, and that's really when you're past your mid cycle and you're into late cycle, and you're arguing that we're still that we're probably in mid cycle, even though most indicators are saying early. I can definitely see late cycle in Q3, Q4 this year.
Yeah, so that will be still where we're looking to be the top of this cycle, particularly the link to Bitcoin. And if we look at this, it's sort of going to that next part of it, which is the analysis of global liquidity. We know that global liquidity and world wealth are tightly intertwined. What the question for me is whether this prediction here, because this dotted line is the work from cross-border capital sort of predicting that we do expect to see higher liquidity into the rest of this year. However, the markets, you could argue, have already gotten a little bit ahead of themselves, particularly if you think about the S&P, the NASDAQ, those big international stock markets based in the US that really have seen all-time high after all-time high. We've had property prices up there. Really everywhere you look, we're at highs in markets. If this is the view going forward, we have seen periods where certainly global liquidity can keep going and markets sort of cap out. Is this a headwind scenario, do you think? Because I get a little bit worried looking at that to go, well, yes, we can certainly have another leg higher in asset prices, but if we can see the end not that far off in the distance, are the best days behind us?
There's also, we talk about the end of the cycle being towards the end of the year, but there's also the probability that we just chop sideways for a number of months, like we saw last year. We had 6 or 7 months of just chopping sideways until the liquidity resolved itself. So as we'll talk about it again during this episode. A lot of it's based around US dollar, and we really need that to come off. Otherwise, the US can't. If the US has a strong dollar, other economies can't stimulate. They can't push money into the global economy, especially China. They're a huge portion of a huge contributor to global liquidity. So at the moment, that's what their hands are tied, even though they're in somewhat of a sinking economy. So, but to your question, we can chop sideways for a number of months. It's certainly on the list of probabilities.
And from my view on that, I think 2025 is probably going to be a more challenging year for crypto investors than 2024 was, because even though we can see that really big blow off top that everyone's hoping for, it won't be without the chop around it that really unsettles people and they end up cutting their position too early, or there's lots of challenge. So it's probably good that we now analyze it through this lens to keep people on that same path the whole way through, because it will be more challenging than what last year was, which was pretty much up only once we got past the more challenging start of the year, I suppose. All this conversation around macro is against this backdrop that we're talking about it because there is a high correlation with Bitcoin, particularly around global liquidity. Did you have more to add on that, Joe?
I was just going to say, we're not going to this year in terms of this year's going to be a challenging a challenging year. We're just not going to have the same conviction that we had last year coming off the lows in terms of our global liquidity indicators. So all we're going to add.
Yeah.
It's just about conviction.
Isaac?
Yeah, I 100% agree, especially coming to this, even from a technical viewpoint, coming to this stage in the cycle, you can't have that same level of conviction. You have to be looking for tops and these sort of indicators and things that fit that narrative to the downside to form that conviction for the inverse of what we were thinking before. So, and everyone, all the big players and all the smart money is going to be doing the same thing. So it's going to make it extremely hard for retail. Which is going to cause so many, it's going to be, I think there's going to be very choppy, very spiky, all sorts of different things in the market, which are going to be very hard to trade.
And
Especially
we
with all
saw
those
indications
narratives.
that's right. And we've seen indications of that, lots of narratives, which we'll get to in a minute, around what was going to happen with the Trump inauguration and what was going to happen day one, and people really getting into one and then getting whipped out when those things the magic didn't happen straight away, but then other magic happened that wasn't anticipated. This is what a choppy final year of the cycle can look like. What gives us conviction that we're in that final year? This is our long-term global liquidity cycles going back since 1970. We're still in that up thrust of global liquidity. We just know the green dot is coming, and historically we would expect that to be this year. If we look a little bit closer on that, on what it's doing on the specific data, we did pop above a little bit towards the end of last year, and then the latest data, which is for December, was just below there, but the trajectory is still higher. We've already seen this month with the more recent weekly data, which we'll look at in one moment, that it is already starting to look like it's turning back up into that next leg. So all of that's looking pretty good. Joe, I just wanted to come back to a point you made just before about the rest of the world. What's your take on this here? Because this is pretty green, which would indicate to me that most of the world is pumping liquidity in. We haven't actually seen the impact of that. Is it just because the rest of the world is not big enough in comparison to the US and China that are the big players that really haven't been throwing everything at it?
Yeah, 100%. So I think where you can take comfort in that is that there's clearly a coordinated effort from all central banks. Like when they want to be tight, they're all tied together. When they're green, they all want to be green together, right? So to see that the fact that there's so much green on there is still very encouraging. But to your point, the US and China are such a huge proportion, and Europe and Japan to the lesser extent, they're just such a large proportion. And especially like what I was saying before, when you've got a strong US dollar, it handicaps everyone. Like it really is a dollar story for why all the central banks haven't come to the party, because as soon as their local currency starts to appreciate against the dollar, that's just a green light to start stimulating.
Talk to me a bit more about China, because they've been in absolute chaos recently in terms of their financial markets and what's happened with their economy generally. Is there a turning point there where we see a lot more stimulus, a lot more liquidity coming into the system from China itself? Because surely they're at that real pain point now where you do turn on the taps, where you do fire the bazookas of stimulus. That's how I would interpret it.
Yeah, well, I think they've been in the pain point for a number of months now. So we were actually calling it probably more toward the end of last year, and it hasn't happened yet. I was looking at some data over the last couple of days that shows their growth in M1 in their broad money has actually exploded. So we may end up seeing a lot of that obviously going to happen with the lag effect. So in next month's liquidity data, we may see a large jump in liquidity just simply because China itself has increased its M1. And, there's a potential that they're already spoken to the Trump administration. They've got some sort of deal where they're able to actually sort of shoot that bazooka because they've got some sort of agreement with Trump. So hard to say yet.
Trump did seem to indicate that he had been in talks there that potentially could back up what you just said.
Yeah, 100%. So I don't know the exact details of it, but if you look at the offshore yuan this morning against the US dollar, it had quite a bit of strength in it against the US. A number of currencies rallied against the US dollar. So this may or may not be the start of the turn of the weakening of the US dollar, but we'll see. But I find it a little bit coincidental that they've just exploded their M1 money growth while also having the offshore yuan strengthen against the US dollar. So it seems a little coordinated, but time will tell. We'll know this time next month, that's for sure.
Yeah, and we definitely will see that unfold through the data that we're looking at. This is another measure of global liquidity through looking at it through rate of change. And really, this chart did a fantastic job because it peaked out and told us that we were running into some headwinds. Remembering this is a logarithmic chart, so big moves look quite flat when you look at it in log scale, but it really showed that there were headwinds through this period of time. We expect this to be turning up, so that provides the tailwinds later in the year. But for the moment, we're still catching up with the fact that it really wasn't. There was no spectacular return of liquidity. What we would have hoped for is something that looked more like this, where it just, we just had the real pumps going. That's not what happened. However, it is still positive. We're still above that zero line just. So there is still liquidity, sort of the rate of change is in the right direction. So it's still actually negative, but it's heading in the right direction. That's what that other chart was showing us. But we do expect it to push up and that rate of change to improve. So it's all looking quite good. This is probably my favorite chart, though, in terms of specifically what's going on week to week, because this is looking at real liquidity data in terms of trillions of dollars, hundreds of trillions of dollars here, as is the case, and seeing that we are getting that tick up. Bitcoin potentially being a little bit ahead of itself here. Do you, Joe, your view on the price where it is? Did it really take off on more speculation? Because I would argue that this wasn't giving the background for it to take off. It got ahead of itself. Is it just anticipating more liquidity to come, or was it, in your view, on the back of a lot of speculation around really the change of government?
Yeah, I think there was a fair bit of speculation there. We also got to remember that we went from 65,000 to 100,000 in absolutely no time at all, where liquidity basically tracks sideways to down. So the fact that we've had this consolidation over the last couple of months makes complete sense to me. And without that liquidity backdrop pushing up, which we do expect it to push up, there's always potential that Bitcoin's sort of sniffing that out. I think it's fairly priced at the moment, with potential. There is always that chance of a little bit more downside based on where we think liquidity is over the next couple of weeks. But in saying that, this chart, I think the phrase you used when we were speaking about it yesterday was, it's obviously not a perfect chart. That liquidity and the price of Bitcoin will, these lines would dance around each other. I think that was the phrase you used yesterday, wasn't it? Yeah. So
well, that's sometimes Bitcoin's getting ahead of itself. Sometimes it's playing catch up.
Yeah, 100%. And, to have there is no perfect correlation. There's something that gives you a reasonably good indicator as a single indicator. So that's why you've got to piece multiple indicators together to try and get, to try and sniff out exactly where we are. But in my eyes, I think we're probably, with that liquidity fall that we've had over the last couple of months, even though we were expecting a sharp rise towards the end of the year, Bitcoin's been trading pretty well, in my opinion.
And it's certainly, this is going to help if we see this line heading back up to new all-time highs over the next couple of months, which is quite possible.
Or if we see the DXY come off, we've also got the Treasury General account that needs to be drained coming into the debt ceiling as well. So there's about 600 billion. That's all potentially liquidity positive. Then you come around to March, April tax season, the government needs funding again potentially. So we may see that liquidity fall off towards the end of Q1. We'll see how we go.
And if it just on that point, if you look at the first 3 months of last year, which is that part, we could absolutely see something like that again. That sort of push up into that, which would get us to new. I would expect possibly to be at new nominal highs above that sort of 175 number, which would be a really great start to the year. All right. Well, we've covered a lot of the background there, the big picture macro stuff. Isaac, we'll turn over to you now and look at some of these Bitcoin specific things, because against that backdrop, we can now compare and see what's going on there. You've talked about this a number of times, and you often like to start off with this idea of the market value to realized value. For those who might be new to watching what we're talking about here, can you just give that quick overview of what this chart is actually showing? Because it has been sort of a foundation of your analysis throughout the last 12 months.
Yeah, so for a quick overview, I guess you could say the blue line is sort of the aggregate average price that most holders have Bitcoin, so most long-term holders, obviously. And then the market price is obviously the black line over there. So what the MBRV is essentially showing you is the ratio, and it's giving you the score. And when it peaks up very high means the market is running up way higher than the average cost basis of Bitcoin. And that lets you know if we're entering a euphoric stage, if we're overvalued, and all these different types of things, right? So we can see that every cycle top, we've had significant increases and a large acceleration towards the end. And this is towards the later end of the cycle. Obviously, you can see it peaks up very fast. We sort of were expecting that. I was sort of expecting it to shoot up a lot faster right now. But right now we're consolidating, and it sort of makes sense with what's happening on the backdrop of global liquidity. But yeah, that's sort of an overview of this indicator. It's meant to give you a rough idea of where sentiment is in a way, because it lets you know what the market is doing in relation to realized price.
And I mean, we'll come back to this in the months to follow, because you had been suggesting that we might get a lower top, but you certainly don't think this is the top where it is right now.
Yeah, there's not enough data to suggest this is a top. And you could draw a line there, right? And you could say, oh, this is the top. Like there probably is a case.
Because it's getting a lower top each time.
You can 100% do that. But based on all of the metrics, there isn't enough tools to suggest the top's in yet. So I'm not going to sit here and say that. But obviously we can see that each peak has been, I guess, lower than the previous. But then there has been anomalies. So you've seen the other one, which is the middle one, which is a bit higher. So it's not, you can't draw this and say a conclusive idea and it's going to be lower, right? Well, I do expect it to be lower than the previous ones. But even if we go to 5 in the metric, that's going to put us way higher in a nominal value for Bitcoin. So yeah, in terms of pop now, I wouldn't be expecting that.
And what I love about that is it would line up with the narrative that we're talking about, where it's later in the year. So a number that we get one more run up that takes 6 months.
Yeah, I mean, there's sort of like two parties right now that are saying, oh, we have the big blow off top, Q1, Q2, and there's like the ladder in this cycle, right? I think either way, it's going to paint a similar picture in this with a large acceleration. One just will be a bit more extended. So yeah.
And that's a really good point, because I think we have our base case as there's later in the year, but we will be on the lookout. If we get the indicators that it's earlier, we will certainly be acting upon that when that happens. Part of what drives that is this idea of sentiment. And as a general rule, it gets quite extreme. Are we at those extreme levels yet?
In terms of extreme levels, we're not at extreme levels right now. So, and then by the way, just to say, the market doesn't even have to top on an extreme level. So according to this metric, you can see the second peak of the last cycle, we weren't even in the extreme greed. We were in the greedy section, but not extreme greed. So in terms of sentiment, that's a bit hard to track, I guess you could say. But I like to look at it as the overall trend. So we in an overall, more greedy section? Yeah, I mean, yes, the answer is yes, right? And before we had the large acceleration up to the 100K region, we were in the more depressed area. That's from that 7K, 70, that chop for that 7-month period. And yeah, sentiment dried up, and then we saw that subsequent increase. So there's a few different scenarios right now. If we have a left translated cycle, which we'll go into left translated in the 6-day cycle, we might sort of drag that sentiment out a bit, but we'll sort of go into that a bit later.
And looking at it on a really short-term analysis with your bull and bear index, a little bit of steam's come out, considering how much excitement there was in the market over the last 48 hours.
Yeah. Well, it's just been very choppy, as you can see. Literally, yeah, I mean, to me, it seems like all the leverage is being wiped out from both sides, short and long. And this is on the backdrop of people reading news, Twitter going crazy. So there's so many things happening, and traders are getting chopped up, and that's clearly visible by the sentiment. You can see the overlay of the Bitcoin price, which is the white line, just up, down, up, down, up, down, zigzag.
Which makes sense on that short term. It almost becomes somewhat useless. Like it's not useless, but somewhat useless on that short term when it is so volatile, because trying to track the sentiment on that it's all over the place.
Yeah, because we hit all-time highs yesterday, and then now we're back down to what was 100K or 101. So extremely choppy.
Yeah, and they're percentage-wise, these are massive moves that are happening in 24 hours at the moment. So it's all over the place. Zooming out a little bit with your sentiment, looking at the RSI, these metrics look fairly high, but we've seen them stay high for periods of time. Yeah,
well, they can stay high for ages. So the 2017 cycle stayed high for way longer than probably anyone was even anticipating. And the 2020 cycle, you can see that's what we're sort of looking like right now. Now, if we are going to fulfill that, that's turbo bullish. I don't necessarily expect it to be like a nominal increase of like that, right? But in terms of what it looks like from a visual perspective, we sort of are looking like that. We haven't had the green yet on the standard RSI, which is the middle one. And the stochastic is very similar. We pinged off that 50 percentile region in the middle, and now we're sort of just on the increase here. So yeah, we might consolidate for a bit longer, but I would say overall the expectation is still higher. And even though these metrics are in the quote unquote oversold territories, they can stay there for a while, and we still haven't reached the outer upper bands of the extremes.
Overbought territories, I'm sure you mean there, but
overbought. Sorry,
but yeah, I completely agree, and I think this is a good reminder that this isn't the easy money. The easy money is back in the first,
the easy money is where the RSI is dragging the bottom, and then you got the market cipher that's got that exacerbated little, the little ball looking semicircle. So that's the easy money. Now we're in the other stage where you're trying to chase those gains.
Yes. And you want to be looking the other way, which is what we're doing. We're saying 2025 is where we're looking for a potential top.
Correct.
Some search terms, you've talked about this in the past, which is just interesting more than anything to say, are people really getting into this trend? That doesn't necessarily spark the highs. I mean, it's certainly coming off a bit there.
I think with this specific one, it might be slightly lagging because of the extended time frame. Because when I did type how to buy crypto and I shorten it down to, if you go to that next chart, you can see the past 5 years, it has a projected value. So I don't know if they've yet put that in their data set yet, or like how that exactly works on their side. But this one's saying retail is coming back in a ferocious manner. And the other one is sort of painting a picture of exhaustion, etc. Right? But I'm more inclined to follow this based off how the sentiment feels the past few weeks. So I believe this is probably a more accurate measurement.
And we can say that anecdotally. We've had lots of people ring up and wanting to buy crypto that they've just heard about. And there's a lot more chatter around that, which would align with this trying to get in. And that's often what happens as we're in that final year. You get everyone all excited and learn how to do it and finally set themselves up, finally do the buy, 3 minutes before the market talks.
And I remember talking about this in one of the previous videos where I was saying, as we extend in the bull market, your average level of interest is still going to be higher. So if you go back to the previous chart, we should be at an average higher level, right? When we are. So opposed to the last cycle, there's more interest, just a little bit more you can see in the search terms. And we're waiting for that last big push up, which we're probably going to be getting towards the end. So we'll see what happens with that one.
And you've talked about this before as well, something you were keeping an eye on, not a traditional metric, but just seeing that more addresses would tend to indicate more people interested in the space.
Yeah, and that one did turn out to be correct for that pivot up to 100K when it sort of bottomed around that region. We have seen a cool off since the 108K top. But right now that remains the low, and I'm going to stick to that and say that is probably going to be the low. But yeah, we'll see how that all goes. Again, this is active addresses, so it's not address creation, but it's active addresses. So maybe activity does go down a bit, and that could obviously make the low come in. It could make go lower, right? But previously what we've seen is in bull markets, it typically tends to be in an uptrend. So why would I be sitting here saying otherwise?
Makes sense. Now, this was your pull it all together chart, and it's still got us up in that red sort of zone up here, but not necessarily in the dark red, getting overexposed, pulling a whole lot of things together.
Yeah. So it's sitting at 81 right now, which is, if you're a very conservative trader, then that is a region where you'd start to look to be taking your profits. But if you want to sort of milk this to the much as you can, typically what we've seen is those regions of 96 upwards, right? The market cycle tops. The only anomaly is the 2020 cycle, where the first peak was very heated. The second peak was around 80 something. So yeah, that's a bit tricky, but typically you'd expect to see 90 plus. We haven't seen that yet. And there's a whole bunch of other things that are pointing towards we're going to be going higher.
So we'll keep an eye on that one as we go throughout the year as well. This monthly Bitcoin analysis is brought to you by the Ainslie Group, Australia's trusted choice to buy, sell, and swap gold, silver, platinum, and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we're your reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard, the security of real-world precious metals combined with the flexibility of blockchain. Now, Joe, you talked about this a lot. Ever since the ETFs come out, you've been tracking this concept of is money flowing in or is money flowing out and what that's meant for the market overall. We've been away for, we're away for 2 months because we didn't have a video in December. What's been going on?
Well, over the last probably month and a half, not a real lot. Obviously, we've had a lot of holidays, a lot of days that the market wasn't actually open. So, probably people are off doing other things as well. So you're not necessarily going to see a lot of flows. Back in August, September, we were saying once you break new time high, you're going to have a lot of new flows into the Bitcoin ETFs. And that's exactly what we saw. At the moment, we're still chopping around a lot. So I dare say that we'll probably flatten out until we make that significant move higher. I just wanted to point out as well that ETFs now are holding 512,000 Bitcoin, right? So while some like IBIT and a couple of Fidelia, I think IBIT actually holds more than that. I'm talking about net flows in terms of Bitcoin into ETFs, which also includes the Bitcoin that comes out of GBTC. So at the end of the day, 512,000 Bitcoin is still 2.5% of the supply that will ever exist, and you're not including all the coins that are lost. So yeah, still going super well. Like it's pretty much killing every other ETF out there. I think it's now in the top 7 BlackRock ETFs that have ever been launched, and that's within 1 year. I was also listening to one other point that I wanted to touch on. A lot of people think that IBIT's there, like the BlackRock ETF, and it's available to everyone. I was listening to Jordan Visser, who is a like a market analyst in the US, and I imagine he's I don't know how much he's worth, but he's probably worth a little bit. And he was saying, in terms of credentials to actually buy the IBIT ETF, he was saying he was still having trouble buying it based on like his net worth and that. So it's not even as if this is, they say retail's here. Retail's not here. This is not. It's not even. They're still making it difficult for a lot of people to buy this. And then you look at Vanguard, for example, who still don't even offer products like this to their clients. So Vanguard's obviously the behemoth. They're bigger than BlackRock. So once they come on board, I think we're really going to see this thing take off. And that's literally retail investors. It might take a couple of years. We don't know.
And that's a really interesting segue because there's lots of Trump things we can talk about here because it's certainly been the focus. But just on that point that you just made, we know that they stood back and wouldn't enter the space because they said, well, traditionally that's not where our customers are. We think it's too risky or whatever their excuses were or reasons were. Now you've got a president doing some wild things right from the beginning.
Wow.
We've seen Facebook, for example, as just an example here, that we've seen Mark Zuckerberg really change his tune on how Facebook was operating in anticipation of the new president and the new whole regime around this.
Yep.
Is there potential here as well that you see some of those players who were holding off going, well, hang on, we're in a different world now, so we kind of have to get on board?
Well, you look at the policies that the Democrats had in for the last 4 years in terms of, I'm not sure the viewers are aware, but effectively a shadow policy of Choke Point 2.0, which was very anti-crypto. It debanked people within the industry and a lot of other shady things that were going on. And now we're moving into an era where you've got Trump, whether it happens in the first 100 days or not, is even talking about it. And back to what Isaac was talking about in sentiment as well. It obviously pushes sentiment around a lot. People expect a lot of things, nothing happens, but these things take a long time to play out. And the fact, once again, that the fact they're even talking about it it's just huge. That's really what I want to talk about here, because you can see that the pricing in this market is all over the place. Like it's gone from practically 10% in January 1 all the way up to, it was actually a bit higher than 50% yesterday, but it's been recharted. Back to 55, 60% as of yesterday. So you can just see how, first of all, how important things like this are for sentiment, but to the long-term view, I think we're going to have 4 great years of regulation, regardless of what the market does.
And let's talk about the giant elephant in the crypto room. So,
if you
I mean,
if you're
people,
living under
anyone
a
in the
rock,
crypto space who doesn't know about this would have had to have been living under a rock, because I had lots of people asking me about it who weren't even really heavily in the crypto space. This would have to go down as we're living on an alternate timeline type move, where you have the president of the United States days before the inauguration launching a meme coin. What does this even mean? I want both of your takes on this. Isaac, I'm actually going to start with you. What does this even mean?
Start with that.
What does this mean, Isaac?
When I first saw this, I was absolutely shocked, because I was in my room and my brother came into me and he's like, Donald Trump's just released a coin. And I'm like, I wasn't even taking it serious. So it was a joke. I thought it was like, there's all these memes that are getting made. Next, when I go on Twitter and I see the official Donald Trump page has made a coin. And then we go on the chart and the things just shot up to billions in evaluation in like a few minutes. So I'm sitting there shocked, and I don't put any money in, because I'm like, oh, surely this thing's fake and it's gonna get hacked. And I did regret that. I regret that. But yeah, it was a giant shock. And I guess many people have different takes on this. But my take is, obviously, I think Trump's bullish for crypto as a whole, right? All the policies that he's proposing and all these different things, Bitcoin Reserve, that's good. But this specific project, and then to top it off, Melania came out, and obviously it was part of their team that did it all. Obviously, it wasn't them specifically, and dropped that. And then they sort of did rug in a way. I mean, Trump dropped like 60% in like a few minutes, and then Melania Coin did similar stuff. It just doesn't give a good image, because in my eyes, just the meme thing, it's just a lot of the boomers will be looking at that and saying, what's Trump coin, and why did it rug? Like, their kids will be saying, oh, I lost all this money in this, because a lot of people are probably buying tops and stuff. But yeah, again, it does bring interest, and it brought a lot of money into the system, especially Solana, which drained a bunch of the other altcoins. Yeah, it's a double-edged sword. I guess it can be good, but then I also think, it doesn't look the best to drop a meme coin days before inauguration.
Look, I'm going to say I'm going to say my bit first, Joe, and then I'm going to end with you, because I think you'll pull all this together. I actually did something I very rarely do, and I put a short trade on this coin. I started way too low in the 30s and ended up shorting again up in the 70s, and took out that profit today and did quite well out of that trade, because for me, I thought there is no way this ends well. Like, as it was happening, I went, you've got a situation where effectively billions of dollars out of nowhere is being generated and handed over to someone in the ultimate position of power. And you can pat that person on the back and say, well done for taking advantage of your position. But I probably lean a little bit, I'm right split in the middle on this. And I probably lean a little bit towards what you were saying there, Isaac, that I go, if this is the way that you start, where do we end this next 4 years? Like, it's going to be a wild ride. So yeah, I don't know. I think overall, it certainly is very bullish in terms of green lights, because he's obviously not concerned about any of these things being considered securities or any of those things that we were worried about for the last 4 years. That's all out the window. So very positive news. But the actual fact it exists, the fact that that money was funneled directly to personal gain, and I don't know all the specific details of it, but that's certainly how it looks, I think raises some questions. But, I profited from it. So thanks, President Trump. Joe, what do you think?
I think anyone that put their money into it, and a lot of people that I speak to who put their money into meme coins, whether it be Trump, Doge, Elon coin, or whatever it ends up being, have the expectation that they're probably going to lose their money. It's like when you buy a lotto ticket, right? You have the expectation that you're going to lose your money. Now, in Keno or pokies, or it doesn't matter what it is. But at the end of the day, if I was to have a choice of where to put my money, if it was going to be a meme coin, lotto tickets, or pokies, I'd be putting it in a meme coin, because the risk reward there is far better. And everyone knows that the music's going to stop, right, at some point, and it's whoever gets their money out at the last moment. So, it is a little bit reckless. Like, I'm certainly not saying it isn't reckless. But anyone that was buying this, I'd say 90% of people buying it knew what they were getting themselves into, right? So, in terms of regulation, like, if anyone did this 12 months ago, they'll probably already arrested, right? But the fact that the president's doing it, he's clearly not going to be arrested. And it just, to me, it feels like ICO boom 2017. It's just going to be loose, which, can be, people are going to get burned, and some people are going to make a lot of money. And I think that's just what's going to happen over the next 4 years.
Well, it certainly was one of those
That's my
times
take.
where you could not stop looking at the chart because it was just amazing. I know Joe and I were back and forward on it constantly. It was an exciting little period of time.
I did buy a little bit and I did all right out of it. And I did warn you not to short at $27 or whatever it was.
You did. I needed more shorts to bail myself out of that short, but I eventually was proven correct. So I still have 100% track record of success on shorting stupid, not stupid things, but just stupid speculation where it just goes ridiculous. Remembering just, I think sometimes people don't understand how much money was involved there, where it was larger than all of these companies that have thousands of employees, and it was based on absolutely nothing. It was a pure meme. It was nothing.
Trump made more in that 24 hours off the coin. His coin was worth more than he'd made for his whole previous lifetime.
Yeah, like that's in times like that. Sometimes I can't help myself, and I become a degenerate shorter. But that's what happened anyway. We'll move on past that to what I think. You've talked about this a lot. And I know, Isaac, you've got opinions on this as well, but I might come to you a little bit later on it because you've got a chart as well. The dollar. I've been really concerned about the dollar's strength being that wrecking ball that you've talked about in the past. Joe, is there relief in sight? Is it because the anticipation is that the policies that Trump's going to put in place are actually very pro-dollar?
Yeah, and that's like how they always seem on the surface. Like initially, like it's not like he hasn't declared to the world what his intentions are, and the dollar's obviously reacted to that. It's just whether or not the dollar's now overbought. So I brought along this chart as an overlay of Trump's last presidency. So he would have been inaugurated at the start of 2017, which is basically where he talked the dollar down. It did nothing but tank from the start of 2017 all the way down into 2018. And, if anyone who was around for 2017 saw an absolutely ridiculous crypto run, and that was, the stars aligned, liquidity came in. Liquidity wasn't huge. It was reasonable, but, we had weakening of the US dollar certainly helped the market that year. And it was a crazy time. So, if everything plays out exactly as last time, which it never does, but, it rhymes. The dollar's potentially already priced for perfection, and we may see it come off for the rest of the year.
That will certainly help liquidity because we know the dollar is a big factor in the global sense of what constitutes global liquidity. Isaac, we've spent so much time talking about Trump that I'm going to hustle you through some of these charts on the technical analysis side. But this one that we start off with, I've been waiting for us to finally hit that green because you talk about month after month and we were along. I remember halving, we're like, oh, it's so far away, but we're here. We've arrived.
Yeah, that happened a lot faster than I expected, but here we are. Anyway, where we are, we've entered the first section, according to this indicator, is where you start to look to sell. So I'm not saying sell, but this is the section where you start to switch your bias and look for those top signals. And the darker it gets the lighter green, I guess you could say, it gets, the more you have to build that conviction in whatever you're looking at. So whether that's global liquidity, whether that's a past cycle indicator, or in our case, the aggregate of what that is, right? So we're going to be using this to this is the time horizon. So this is where we are right now. So obviously it captures from the start of this year to the end of this year, that whole period basically. And that's whether we get a Q1 top or a Q2 top, Q3, Q4, undetermined yet, but this is a very pivotal indicator to be switching the bias. And I think a lot of people should be looking at it, because what we're probably going to see is repeat of last time and previous cycles where we've seen people buying big positions towards the end of the cycle, which doesn't make sense when you should really be buying in those yellow dots in the bottom and your DCA entries.
And what I really love about this is that this indicator is actually pulling us a little bit, because you can see 2026 is there. It's pulling us into probably more of the Q3 type zone, which of course this is just one indicator. We'll be looking at everything, but it's something that's pulling it a little bit earlier. And that's always the risk you have in these things, is that you hold on too late, considering we did buy back down around here and we're already sitting on considerable profit. But where we take it doesn't need to be the actual top. We want to get as close as possible. But if enough indicators line up, we want to move out of that position. And this is certainly one we'll be looking at, because it's pretty clear that we're entering that zone.
100%.
with your stochastics, is that still giving us capacity to move up?
It is. It is. So there's. I'm a bit torn, and I say that a fair bit, but the price always seems to do that, doesn't it? So where we are right now, the stochastic is sort of signaling a flip there in terms of the weekly chart. So that would suggest momentum should be shifting into the upside. But then you're on the backdrop, you've also got, are we going to have a left translated 60-day cycle? Because that narrative wouldn't fit what that chart's saying. And then obviously you've got all this sell the news event sort of stuff happening right now with the Trump situation. And then the other thing where are we going to see consolidation to then sort of drag out retail, ruin sentiment before our next push up, sort of what we had the 7-month consolidation period. So there's a lot of different varying opinions. This one metric says, yeah, we should be expecting to see momentum come back in based on that singular flip in the bands. So I wouldn't put too much weight into that though.
If you combine that with the volume profile, is it painting a similar picture?
It was when this was made, but since then we've ducked back down again. As we said, it's been very extremely choppy. So we're now sitting around the value area high again. So yeah, around that region, right? So what we saw was chopping in and out of the range, saw a large increase up, took out the high. So that's, we generally call that a swing play pattern high. So you take out those short entries that were there and then duck back down back into the range per se, then found support in the value area high. So we're just consolidating in this region. That is technically, on a technical viewpoint, purely that is bullish, I guess you could say. But I'm more leaning neutral. I think that's what's going to happen because of the fact that it would make more sense for just to drag out sentiment, because I think sentiment's a bit heated right now. And if we want to see a Q3, Q4 top, then we're really going to, our most favorable positioning and for the market necessarily like to see is retail gets dragged out. We see sentiment drag out for that next flush up. So yeah,
that's such a good point. And looking at it through the lens of these 60-day cycles, to get the risk that we have is that your count here is correct. Now, for full sort of transparency on this, I know Bob Lucas's count, where this sort of theory comes from on the cycle counts, is he's called a 65-day, whatever it was, he called it a bit earlier and said, not the 70 days. You put the 70-day in there, which would be the most bullish count, saying that this is a brand new cycle and we're heading up. Another view would be that we're sort of, this would be a potential top and then we spend the rest of this chopping sideways. The irony of this situation that you just highlighted is that if that's a top here that we just saw on inauguration day and it heads down for the rest of the 60 days until sort of March-ish, end of March type scenario.
Yeah.
That's actually the most bullish setup, isn't it? Can you just explain that? Because people struggle to get their head around that.
Yeah. So I'll sort of explain that. When sentiment's very high right now, and when you drag sentiment out and you get people, you take out liquidity and leverage out of the market. That's another way to say it. Take out leverage out of the market. We saw that in the previous 7-month chop when we chopped so much until everyone was drained, and then it's ready to push up. So liquidity books, the order books are more free. That's another way you could view it. And the pushing up is easier. And especially at these lows of these ranges, what you typically see is, the support there, and the big traders are switching hands there with short-term traders. That's what we saw. That you can see this bottom here has been pretty significant too, right? At around that 90K region. And I outlined this one in trading scene like as a buy zone, and we ducked into it and we saw immediate support coming out of that, whilst also seeing people short into that, which was adding leverage to the market, which then got wiped up on the upside. So yeah, it's bullish because sentiment, the main reason is because sentiment gets dragged out. And that's what I think is probably going to be the best thing to happen.
And it is so important because if we do head straight up from here, that increases the odds that we're actually going to see the overall cycle top much earlier in the year, because there's too much sentiment, too much.
Yeah, it will run up way faster than global liquidity would. And then those alligator jaws have to go back together. So yeah,
that's right. So even though liquidity could still peak later, it doesn't matter. We could still, in that scenario, we could see the crypto just got ahead of itself. So it still peaks earlier and global, and then just doesn't really collapse, just heads back down. Global liquidity catches up and then eventually rolls over, and we're in a bear market.
Yeah.
But in the shorter term, your CVD, cumulative volume data. What's that telling? What's that saying?
I just wanted to add this one to sort of point out that low we had, and sort of what it looked like for people who are actually interested in this. This website's called Coin Analyze, and you can go here and track on sort of what the behind the scenes of price are doing. So I use open interest in the CBD on the futures market. I like to use Bybit. I just prefer the data on Bybit. So what we actually saw there going into that low was an open interest increase, which means positions are being opened, and CBD is going down, which is market shorts if that's going down. So a lot of people shorting the market as we're entering support, right? Which sounds counterintuitive, which it turned out to be, right? And then we saw the opposite of that happen. So they had to, if you short, then you have to buy back. So you can see how the CBD increasing as we step up in the price, and then the open interest is going down. So they're being forced to close positions by buying back. So that's what happens when you're in a short position, and that's fueled a large amount of this move going up. So yeah, that's just one of a trading insight I wanted to show.
That's very useful. You also, I just wanted to touch on briefly, were thinking the dollar has a big role to play here.
Yeah, and I believe in the last video we were talking about, we were at the channel high, from what I assume. We did see a bit of resistance there, so you can see there was that red hammer-looking candle, I guess you could say. Since then, we've seen some large increases up to, I think it did $1. Was it $1.10? I think it was $1.10 now.
110, yeah.
Yeah, and the stochastic right now, if we follow the fractal that Joe was showing, then that would paint a perfect picture, right? So the stochastic starts to roll over, that sort of follows. It is going to be quite hard to say what's going to happen, as we have now. Technically, there is cases that are saying this is like a Wyckoff accumulation, and then for a increase up, and that was like the spring that we're going to be sort of having. But again, these are patterns being thrown around, fractals being thrown around. But we all know that if the dollar is going to decrease, that's going to be really, really bullish for liquidity and then the Bitcoin market. So fingers crossed that does happen. But
that's certainly where we would like it to go if we had a choice in it. You talk about the pie indicator just as another one to sort of throw into the mix. What's that showing again?
Yeah, I just want to say for this one, we're sort of teetering around that the yellow line there. So that's one of the EMAs. So it's like the 111. Yeah, 111-day EMA. So where typically when we reach that level on the bull market, we tend to find support. So this is quite zoomed out a bit. That does allow some drawdown to the lower regions. I think it's around 80 something K level. So if we do reach that, that's still fine. And that would fit the chopping narrative if we were to do that.
Yeah, so you don't need to be shaken out just because it doesn't mean we're necessarily in a bear market if we get to 85,000 or even 75,000. When I was looking at sort of the highs of the previous run up around that 75,000 level, you went, well, if it got down there, it still doesn't break the structure. It's still heading up. It's just the retracement. So that would give us some levels to that. That'll be very testing for people, I think. With that in mind, we have this liquidity zones picture sort of showing us that there's a lot of lines down here. Is that potential targets, for lack of a better word, that we have in that sort of medium term, potentially if that 60-day cycle that you're talking about plays out, that it is to the downside for the next couple of months? There is an argument here to be made that it can head significantly lower.
100%. And we know the track record of this has been pretty accurate. But yeah, it has tended to be pretty good. So I guess, and there isn't that, and then it would make sense, right? If we did hit those levels, you could look back and say, the liquidity zones were saying that. So yes, the regions are towards the downside in terms of the web liquidity. And it's not the web liquidity, the liquidity zones.
And an easy way to think about this too is this is where people get liquidated, like different words, liquidity there, but where they get liquidated in their positions, because what this is effectively saying is lots of people are betting with leverage that the price is going to go up. It has gone up, but if it goes down, they get wiped out at certain levels. And there are still some targets sitting down here where it's going to cause a lot of damage, not so many targets above, because that means not that many people are being shorting compared to how many people have been betting the market's going to go up. So we know historically that crypto, Bitcoin in particular, likes to do the most damage to the most people it possibly can. So that would be, that would be a bit of a sign there.
Yeah, would I?
All right. Well, look, it's been quite a start. As we said, it's almost like a year's gone by already in the first half of this month. We'll do what we usually do and wrap up here with some sort of thoughts, maybe thoughts for the year. I'll start off with my idea thinking, or my general thinking at the moment, that it is the year where we probably see that high. I'm moving it in after watching Isaac's chart with those green bars to say maybe it is even as early as Q3. Originally, I was sort of thinking it could be later in the year, or even early 2026. But yeah, it's looking that way. There's still a lot of data to pass under the bridge, but we'll be paying close attention on that journey, because ultimately we need to be nimble and dynamic. But I don't think we're at the top yet. So I'm happy to sort of ride out whatever pullback we get. Isaac, I'll go to you.
I agree with everything you've said there. And what we've seen with the data and what is presented, locally, a midterm correction would make sense. But we're in a very tricky time with all this news, and we have Trump's situation here too. So nothing would really surprise me, even if we did have a large spike up. He might say something, and then the odds of a reserve go up, and then next minute this price shoots up. So you can't really sit here and look at the data and be like, oh, yeah, this is definitely going to happen with a solid chance, because he could say something. We're just at this point right now where it's very choppy, and we've seen that, and I think it's going to continue to do so. Welcome to the next 4 years. Joe, wrap us up.
I'm still quite constructive in the near to midterm for Bitcoin and the market itself. I think the only thing I'll add on top of that is, there's probably a lot of people that are sitting on a lot of gains, as we discussed. You'd ridden it from 20,000 all the way to 100,000, 105, where we're currently sitting. It doesn't necessarily hurt. I put this in my report at the end of my report last year. It doesn't hurt to take some money off the table if it's going to make a material difference to your life or lifestyle, or reduces stress, or it does something like that. Because at the end of the day, it's all about the money's there to be made to increase your lifestyle chips. And if taking a bit of off the table is going to increase your lifestyle, that's what it's all really about. So that's all I'll put in there.
That's really sage advice. I think that people do need to be paying attention to that. Yes, we're going to be trying to pick that exact top as close as we can, but ultimately, if you've made a lot of money, who cares if you're off by a little bit? Take at least some of it, and then whatever lets you sleep comfortably and soundly at night is worth its weight, isn't it?
Yeah, you got to have some chips for the next cycle too. So don't get too caught up at the exact level.
Well, and that's a big point, because what we keep saying internally is that we're going to make all of our money really on the next cycle is where we want to be. We want to make sure that we capture as many of these gains as possible, so they're there waiting for that next buy. And oh boy, will that be exciting. But we don't need to wait that long for excitement. We've already had some starting off this year. I'm sure we're going to have a lot more in the month ahead. We'll be back in February to continue this discussion, see where we're at, see what's happened, see what madness has happened in the markets between now and then. It's certainly going to be an adventure. Thank you very much, both, for your time and insights today. Thank you, Isaac. Thank you, Joe.
No worries.
See you, mate. Bye.
Thanks, everyone, for watching. We'll chat again soon.